Have you ever found yourself wondering if there are these quiet, almost hidden advantages bubbling up in the tech world? Things that could secretly reshape entire industries. Not the flashy headlines, but something deeper. Today, we're doing a deep dive into exactly that. It's a fascinating, kind of under the radar story about innovation coming out of Taiwan, and it has potentially huge ripple effects across the massive AI industry.
Yeah, this deep dive comes from digging through a stack of recent market reports, some really sharp analysis, detailed notes too. So, our mission: to unpack the most important nuggets of insight about a specific tech breakthrough, something that could have really significant implications, especially for high-performance computing and, yeah, the future of AI. Okay, let's unpack this. So, the analysis we've been looking at calls this the AI substrate shock. That's quite a dramatic name, isn't it? Especially for something that happened so quietly. The story goes, Taiwan's IP office, their patent office, just quietly granted a cluster of patents, granted them to two mid-cap substrate manufacturers.
Unimicron Technology, that's ticker 3047TT, and Kinsus Interconnect, ticker 318A9TT. And apparently it all happened without a single press release. So what makes this seemingly small patent grant so, well, significant, almost shocking for AI?
Well, the core of the shock, as they call it, it really lies in a crucial technical detail. It's embedded right in those patents. They basically enable a significant reduction around 18% in power loss for FC-BGA packages.
Okay, FC-BGA sounds technical. What is that exactly?
Right, think of them as like intricate superhighways. They connect the most powerful AI chips, letting them talk to each other efficiently. They're critical interconnects. They manage the flow of data, manage power. And when we talk about modern high-performance computing, especially AI infrastructure, power efficiency isn't just a nice to have, it's absolutely critical.
Critical how?
Well, every single watt you save translates to better performance, lower running costs for data centers, and importantly, less heat. And heat is just a massive challenge.
Okay, so 18% less power loss is a big deal.
A very big deal.
And here's where it gets really interesting, according to these notes. The market, by and large, seems totally unaware of this. The sources we read emphasize that neither company has put out a press release. Nothing. And the financial models, the street models, they still assume the old legacy yields. So basically, this huge advantage, it hasn't been priced into these companies' stocks yet. Why do you think something like this could fly under the radar?
That's a great question. And I think it really speaks to how specialized and, frankly, how fast-moving this whole tech sector is. Often these breakthroughs happen in really niche components or processes. They're far away from the consumer tech spotlight or the big product launches everyone sees.
Makes sense. It's deep in the supply chain.
Exactly. And if we connect this back to the bigger picture, the why it matters part becomes even clearer. Think about Nvidia's GB200 and GB300 server boards. These are like foundational for cutting-edge AI right now.
And they're hard to get, right? Supply constrained.
Precisely. They're supply constrained. Now, the analysis we saw highlights a direct correlation here. Get this. Every 1% in power saving translates into potentially 2–3% more sellable units of these critical server boards.
Wait, really? Just 1% saving means 2–3% more boards they can sell?
That's the estimate, yes. So you take that 18% power saving we talked about, that's a huge multiplier effect.
Wow.
Yeah. So it immediately raises this important question. What does this newfound efficiency actually mean for scaling up AI deployments overall? Especially when demand is just, through the roof. It's kind of like finding a way to get significantly more mileage out of every gallon of fuel when you're already running on fumes.
Okay. That analogy clicks. An 18% power saving unlocking potentially, 30–50% more Nvidia units? That's an incredible ripple effect. So we've got these quiet patents, this significant power saving, and a market that's apparently asleep at the wheel on this one. What did the sources say this actually means for Unimicron and Kinsus, the companies holding the patents? What's the bottom line for them?
Well, that's where this valuation gap comes into play.
Right.
The analysis points out a really significant discrepancy. Right now, both Unimicron and Kinsus are trading at about 10 times their estimated 2026 earnings per share. So 10 by 2026 EPS.
Okay, 10 times earnings. Is that high? Low.
Well, compare that to their global peers, companies in the same kind of space like Ibiden and Shinko, big Japanese players. They're trading closer to 20 times those future earnings.
20 times, so double the valuation multiple.
Exactly. A huge difference for companies operating in a similar, very high-demand sector.
And the thinking is, this gap exists because the market hasn't caught on to the patent advantage yet?
That's precisely what the sources anticipate. They expect this gap will start to close, maybe quickly, once this patent advantage gets noticed more broadly. It's actually a classic example, market inefficiencies. unrecognized innovation. These can lead to pretty significant revaluations down the line.
Yeah.
When a key bottleneck like power efficiency in these absolutely critical components gets addressed and the market finally catches on, that sort of hidden value tends to surface pretty rapidly.
Okay, so we've laid out this really interesting situation. Under the radar innovation, potentially significant market impact, and a valuation gap. The natural next question is, what do the sources we reviewed suggest someone might actually do with this information? And just to be clear, as always, we're presenting the views from the sources here. This isn't financial advice.
Right, absolutely. And the analyses don't just stop at identifying the opportunity. They actually outline some specific strategic approaches one could consider based on their findings. For instance, just getting access. If you wanted exposure, the first step mentioned is ensuring you can trade on the Taiwan OTC market. The sources list examples like needing an account with brokers such as KGI or Fubon, maybe Interactive Brokers for international access.
Okay, so access is step one. What about building a position?
The suggestion from the sources is to think about accumulating shares again. Tickers 3037 for Unimicron, 3189 for Kinsus, on any dip down to their 20-day VWAP.
VWAP, that's volume-weighted average price, right?
Exactly. It's basically a way to try and buy when the price is relatively low compared to recent trading volumes and prices, kind of trying to average in at a decent level. And they suggest aiming for a target position size of around 3% of your total equity portfolio, or equity book.
Okay, 3%. And what about managing risk? This is still investing after all.
Good point. A hedging strategy is also discussed in the material. The idea presented is buying 6-month puts on the SOX Index, which tracks semiconductor stocks, specifically 90% out-of-the-money puts.
So insurance, basically. And out of the money means they're cheaper.
That's the idea. Puts give you the right to sell, acting like insurance against a market drop. Being out of the money means the strike price is well below the current market price, so yes, they're generally considered cheaper than buying puts on individual stocks like Unimicron or Kinsus. The sources note this offers broad market protection for the semiconductor sector, which could be useful if the whole sector pulls back.
Got it. So accumulate on dips, consider a broad hedge. Are there any specific events to watch? Catalysts?
Yes, one key event is flagged, the upcoming Nvidia earnings call. That's expected, I believe, late August. The recommendation from the sources is to listen very closely for any keywords related to the substrate power envelope.
Substrate power envelope. Okay.
Yeah, any mention. Even subtle could signal that Nvidia is aware of or maybe even utilizing these kinds of power efficiencies from suppliers like Unimicron or Kinsus. That could be a major catalyst for the market to notice.
And then what about an exit strategy if things go well?
The sources outline a potential approach there too. It involves trimming the position, selling, say, 50% of the shares if there's a significant price spike, maybe around 30%. And for the remaining half of the position, the suggestion is rolling it into 1-year LEPIAS.
Libby says those are long-term options, right?
Correct. Long-term equity anticipation securities. Basically, long-dated call options that let you maintain exposure to potential future upside for a longer period, potentially with less capital tied up than holding the stock.
Okay, that's a pretty detailed potential roadmap based on the source analysis. So let's pull back for a moment and just summarize the core takeaway from this deep dive. We've really seen how a quiet, seemingly niche technical advantage, that 18% power loss reduction in substrate packages, could have these truly outsized implications for a huge high-growth industry like AI. It really underscores the power, doesn't it, of understanding these underlying, often overlooked innovations that are actually driving progress.
Absolutely. What's truly fascinating here, I think, is how often the really impactful changes seem to emerge from, well, beneath the surface. Far from the big headlines and the grand announcements, this AI substrate shock, it isn't about some flashy new AI model that everyone's talking about. Instead, it's an efficiency breakthrough in really foundational hardware, something that could unlock much greater scale for the powerful AI models we already have just by making the underlying systems work better, more efficiently.
Yeah.
It really encourages us, I think, to always look beyond the obvious headlines, because that's often where the real sort of hidden value lies.
A great point. It makes you think. So for everyone listening, here's a final question to mull over. What stands out to you about how these quiet, maybe even boring technical innovations can end up creating such a large, potentially industry-shifting impact?